The euro's value against the dollar has dropped beyond parity, making it the first time in 20 years that it has been worth less than the dollar. To put it another way, it's a mental hurdle for investors. The true impact of Russia's involvement in Ukraine's war has been felt throughout the 19 European countries that use the euro as their economy. This video is going to be about the euro has fallen below US dollar, lowest level ever for the euro. This July, the euro's value against the dollar dropped to $0.9998. The euro has dropped by 19% year over year and a staggering 80% from its 2008 high of $1.60. Haley Berg, head analyst at ticketing platform Hopper, told the media, "Today what we're seeing is that the dollar can buy more euros than it has been able to essentially since the euro launched." The value of the euro dropped rapidly after its introduction on January 1st, 1999, when it was around $1.19. It passed the $1 mark in February 2000 and touched a low point of 82.30 cents in October of 2000. In 2002, the European money rose over parity against the dollar and significant trade surpluses and accounting irregularities weakened the latter. Before June of 2002, the euro had never been valued lower than the US dollar. However, the value of the euro against the dollar has been steadily decreasing over recent months, and the two currencies are now at parity. For example, €1 was worth $1.20 a year earlier, but by the start of 2022, it had dropped to $1.13. Ever since, the currency has continued to fall in value, reaching a short parity with the American dollar on Tuesday before falling beyond $1 on Wednesday. There is no difference in value between European and American currencies, even though its value constantly shifts. The decline in Europe's economic outlook has been reflected in the euro's exchange rate. Once it seemed like the economy had begun to recover from the COVID-19 disease outbreak, optimistic forecasters predicted a rebound. Now they're predicting a recession. The leading causes are the skyrocketing energy cost and the unprecedented inflation rate. For industrial purposes and electricity generation, Europe relies much more heavily on Russian natural gas and oil than the United States. Because of concerns that the conflict in Ukraine will reduce exports of Russian oil, the cost of oil has risen. As revenge for EU sanctions and armament shipments to Ukraine, Russia has begun reducing natural gas exports to the Union. Inflation in the euro area hit a record high of 8.9% in June due to rising energy costs, which has a knock-on effect on the cost of everyday goods. Moreover, they have raised concerns that governments may limit natural gas to sectors such as steel, glass making and food production if Russia continues to cut back or entirely shut off gas supplies. Russia has announced it will close few streams of Nord Stream 1 flow path to Germany for 3 days next week to conduct regular maintenance, heightening concerns about the project's future and increasing the likelihood of a catastrophic event. Due to supply shortages, outages, and high prices for natural gas on Europe's TTF standard have risen to all-time highs. On Monday, Robin Brooks, a senior economist, tweeted, "If you think euro at parity is cheap, think again. German manufacturing lost access to cheap Russian energy and thus its competitive edge." A weaker euro and a stronger dollar. Many experts anticipate that the Federal Reserve will swiftly boost interest rates to restrict the economy's development in response to the fact that inflation in the United States is perilously close to 40-year highs. This has sent the euro falling. Charges on interest-bearing assets often increase with increases in the Fed's interest rate target. The greater interest yields offered by dollar-denominated investments will entice investors to shift their capital from euros into dollars if the Federal Reserve rates more rapidly than the European Central Bank. To acquire these assets, those investors must liquidate their euro holdings and purchase dollars. The result is a weaker euro and a stronger dollar. The European Central Bank, or ECB, increased interest rates last month for the first time in 11 years and by more than half a basis point. In September, it's projected to go up again. However, if a recession hits, the ECB may have to pause its rate hikes for the time being. The US economy appears to be strengthening, suggesting the Fed may continue boosting and increasing the rate differential. Will there be intervention? The ECB has downplayed the euro's recent weakening by claiming that there is no exchange rate objective, despite the fact that the currency is essential when considering inflation overall. So far this year, the euro has lost approximately 12% of its value against the dollar. However, the euro is only down 3.6% compared to its trading partners' currencies. As a result, the ECB may indicate more aggressive regulation, including a rate hike of 50 basis points in September and other movements in October and December to support the euro. However, analysts believe a more aggressive posture is unlikely, given the worsening growth prospects. The American advantage. In Europe, American visitors will pay less for lodging, meals, and attraction tickets. The euro's decline could increase the pricing competition of European export items in the US, since the US and the EU are significant trading collaborators. The change in the exchange rate will be noted. A higher currency in the US means cheaper imports of toys, medical equipment, cars, and computers, which could help restrain inflation. Major concern for the US. When American enterprises that conduct significant business in Europe transfer those profits back to the US, the income from those businesses will decline. The exchange rate is less important if euro revenues are used to pay for European expenses. The United States has reason to be concerned about the efforts of a stronger currency, as a stronger dollar raises the price of American goods on the foreign market, exacerbating the trade deficit and reducing economic output while offering foreign commodities a pricing benefit in the domestic market. In addition, there may be challenges for the European Central Bank if the euro falls in value, as this could lead to higher prices for imported products, especially oil, which will be paid in dollars. The ECB is already under pressure from several angles. Inflation is being combated by raising interest rates, but doing so can also stifle economic expansion. What effects does a lower euro have on consumers? The burden of a falling euro would increase for European individuals and businesses already struggling with record high inflation. Imports, often priced in dollars, would be more expensive if the currency were to weaken. When those commodities are intermediate or raw goods, their rising prices may increase local pricing. A feeble currency is typically seen as a positive thing for exporters and export-dependent economies like Germany, since it increases exports by manufacturing goods more affordable in dollar terms. However, given the tensions in the world supply chains, the sanctions, and the conflict in Ukraine, these are hardly typical times. I believe the advantages from a weak currency are lower than the downsides in the current circumstances with international tensions. The chief economist for Germany, Carsten Brieske, added, "A weak euro, however, is advantageous for Americans traveling to Europe. For instance, theoretically at the parity level, they could exchange their $1,000 for $1,000, rather than less than 900 euros in February. Or to put it another way, their currency would be far more valuable. Things would be less expensive in monetary terms for companies importing European goods." How far will the euro fall? The euro's continued decline below parity has increased wages as Europe's energy situation worsens. According to Nomura International strategists, the euro might drop as low as $0.95 according to US investment company Morgan Stanley. This quarter will see the currency decline to $0.97. Fearing blackouts and energy restrictions, the European Union has been frantically searching for alternatives as it attempts to wean off Russian oil and gas. Higher energy prices are a result of this. As per George Saravellos, head at Dutch Bank, a ballooning import energy bill is negative for the euro, and our short-term forecasts out to December continue to see euro and US dollars stuck around a parity. He indicated how the sector has shifted to other fuels, leading to a significant decrease in gas consumption and increased liquefied imports of natural gas. While the near-term impact of the ongoing energy crisis remains negative on euro over US dollar, some of the medium-term post-summer European risks have arguably abated, he said. That's all there is for today. Leave us a comment of your thoughts on euro has fallen below US dollar. Also, make sure to leave a like and subscribe to our channel if you enjoyed the video, and click the notification bell to never miss our videos. Stay tuned.